buy, to know when to buy, how to buy. We got to be somewhere, know how to use the technical analysis. So, because that's a good thing. If I want to buy, in that case, that's the way we'd be notified. All right. Today, we're just going to talk a little bit about stock market. Now, MACD, there's a way you can use MACD. So the MACD has two lines. There are two lines. Those two lines, one is a black line, the other one is a red line. So anytime the black line crosses over the red line, it gives you a bullish signal. That means the stock's going up. So whenever the stocks is going down, the black line crosses under the red line. So that means it's going to give you, it shows you a bearish signal. So we have what you call bullish and we have what you call bearish. So in that case, you will know all those things now, my friend. I'm going to show you because those things are very important. MACD. Anytime the line's crossing, that means the stock is going to be reversed. If it was down, it's going to go up. If it was up, whenever the black line goes down, is going to be down. Now, let's go there. Let me show you something. Let me see if I can share some of my screen there. Yeah, see if I can share. I'm going to show you something about it. So, in other words, it is a MACD. A MACD, when the stock is in bearish or bullish. So when the stock is in bearish or bullish momentum. So that's why I'm going to show you the difference when to use a MACD. So in other words, what is a MACD indicator? It is a trend following momentum indicator that shows the relationship between two moving average of a security's price. Again, MACD is a trend following momentum indicator that shows the relationships between two moving averages for a security's price. So use the MACD to identify bullish, that's going up, or bearish momentum. All right. So we have what you call bullish. So what is the difference? Some people, for the new people who don't know, what is the difference between bullish and bearish? Bullish means the stock is going up. So it's going up. Whenever it's green, it's bullish. Bearish means it's going down. So whenever the stock is going down, it's bearish. Therefore, means there's two things, the bullish and we have what's called bearish. So the stock is going down. So it's a signal. So whenever we're going to have two lines on the MACD. MACD means two lines. So one's going to be black and one's going to be red. But you can put, I'm going to show you later how to put them, but you can put the color, whatever color that you want to. But me, I choose those two lines. One has to be black. I put one black and one red. So you have to put those two lines, different color, so it can be identifying them. So you have to put them two different color. So the top, you can put any color you want. In the bottom, you put any color that you want. So me, for the top, I put black. And for the down, I put bearish. So therefore, whenever the black, this is like the black and red. So whenever the black is crossing, I'm just giving you practice before I show you. Whenever the black line is crossing over, so that means it's stock. It's a wedge to go up. It's a bullish top. Whenever the wedge is now crossing down and the wedge get to the top, we have a bearish top. That's the way it works. That's the way I'm going to show you now. You see it? An example of MACD line in the short. The MACD. And I'm going to show you later practice. I'm going to the Yahoo. I'm going to show you the Yahoo Finance. Now that's the practice I was prepared for you. This is the two MACD line. In that case, I put it gray. Now, so we can see better instead of putting black. I put red and gray. So those are the two lines that you need to be identified before you buy. That's the way you use MACD. We call those two lines down there MACD. Those are the two lines here. MACD. So you see, we have the gray line and the red line. So therefore, whenever red line or the gray line cross over the red line, we have a bullish momentum. That's the way you look at it. So you're gonna see here, those are the short, the candles. Those are the candles, all those. So if you see from there, from that corner, start from green, start green, start going up here. Here, that's a MACD line, you see. In this time, the gray line, we call that the gray line. So let me tell you this, the gray line is a bullish line and the red line is the bearish line. So therefore, whenever the gray line is up at the top of the red line, we got a, see, it's going up here and down here, the top, the stock is up. So you have to wait for the signal. Now we're gonna see the red line here. You see where's the circle? The circle, the yellow thing. Now the red line goes over the gray line. Stock is going down. You see, whenever the red line is crossed over the gray line, we have a bearish momentum. You see, here, if you put the line here, you're gonna see is going down. See, stock is going down from here. See, it's going down because the red line is crossing. So it's two lines. The gray, and the red. So whenever the gray is on top, stock going up. Whenever the red line is on top, stock's going down. You see? See the movement, the change, you see? You see the switch? It's been switching here. Up. Gray line is up. Now, red line is up, and the stock is going down. Another here, you see, from there. Now, the gray line is at the top. And stock going up. See, if you put a line here, stock is going up. So, what I mean about that, whenever you buy something, for instance, if you have bought from here, and it's going up, and also, you see the gray line is up, you don't have to be panicked. Just wait. You just have to wait until you see the switch. So as soon as you see the red line cross over the gray line, that's the time you sell. Simple. See, you buy from when the stock is going up because the gray line is at the top. It's going up, 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 up. This one is going up, 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 and then you keep until we see that here now. It's like it's sideways. But you do not panic, you stay. Now from there, there's a change. There's a switch. See? And the MACD line, the red line cross over, that's the time you sell. You sell from there. As soon as you see the red lines crossing over, get out. If you were like says trading something, you sell because here is crossing over. That means the stock is going to go down, and you sell, you take your money, you're out. And again, if you want to come back later, so another day or another week, you've been watching, and now you see, as soon as you see, because especially when you're trading, if you see the gray line now from there, start coming up here, you buy here, you buy down here. And as you see, the gray line is going up, the stock's still going up here. Make money. And again, the red line form, you see the yellow cycle here. That's the point. Now you see here, the stock getting selling now because it's getting sold. Because now what happened? It's changed, switch. See, bearish movement. We call that bearish crossover. Anytime the bearish crossover, that's the time you get out. Because after you bought here, after you have bought here, it's going up. MACD is going up. You stay until it's going up. As soon as the MACD is at the top, you leave it. And then as soon as again you see the red line cross over now, you get out. You took them. You can just put the MACD. You don't have to put too many lines. You can just put the MACD if you want. Put the MACD. The MACD helping you during the week or during the day if you sell in or if you buy. See? And it's going up. Because after you sold here, it start going down. See? All the red line going down, and the red line down is going down. And again, you can wait again another day or another time to get in again. How are you gonna get in? You're gonna get in when we have a bullish crossover. It's two line. Let me show the report this for you. It's two line. There's a red line, and this one is the gray line, for instance. Okay, this two line here. So as that's it. This one is a bullish line, pen. See, that's gray. That's it, bullish. This one, the red pen, is the bearish. Now we got this two line here. It's two line practice because I like to show you better. Okay, you see here. Let's say this one for let's start for me. You see, let's say again. If you let's say this one is the red is a gray line, green line. It's top. You buy from there. As soon as you see this on the top, crossover, you buy. And you leave it because the gray line is at the top. And then you leave it there going up, 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 up. And now, from there, from the cycle, the red line is crossing over. See? The red line crossing over. So as soon as you see the red line cross over, that's the time. You see the red? Because it's going to go down. It's time to sell. Again, from down here, and here, you see the gray line getting crossed over. Gray line crossed over. It's two lines. You just deal with two lines. This two line is the gray and the red. So whenever the gray line is at top, that's the time to buy because the stock is going to go up. Whenever the gray line, it could be green, it could be green line you put, could be black line, but in that case, I put gray. Anytime the gray line, that's a gray line. That's we place a gray line in my table, and that's one is a red line. So whenever the gray line at the top, this is time to sell. You buy. See, buy here because here is a signal. It's a crossover, bullish crossover. We call that bullish crossover. Whenever the bullish crossover, buy. And you leave it. As soon as the green line stay, you leave it. You leave this. You leave what you bought. See? Going up, 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 up. Now, you have the circle here. We have a bearish crossover. It's time for the bearish. Two. Bearish crossover. As soon as the bearish crossover, you sell. You take your profit and you do. Again, now, here, we got a bullish here down here. Bullish momentum. So now, gray line or blue line, whatever line you put, black or green, it's crossover. Premium. You buy. So I see that cost. As soon as you see down here, if you see, as soon as you see in the beginning here, as soon as you see the gray line start crossover, buy from there. You don't wait until here to buy because it's gonna be too high to buy. You just buy from here, and then you wait for it to go up. You wait. See, you wait, and it's going up. Leave it, and now you see the red line. Bearish crossover now. Squash, and you sell here because you see here, after this all going up or going up here, it's crossover now. And then that's a sell off. You sell, you take your profit, you leave it go down. Bearish momentum. You see the red line here? It's go down. So that's the way I put it. So in that case, that's the way you do it. Because stock market, you got to study and know the chart. Sometimes there are some things that you have to know. You have to study all of this so they can help you find a way to buy. Because that's the way you can do it. In that case, I'm going to show you another thing. Okay. So what is the MACD? It's some trend following. Whenever the gray line crossover, we got a bullish momentum. Whenever the bearish crossover, like the red line crossover, we got a bearish. So we have two things in the stock market. We got bullish and we got bearish. That's the way it works. We have something called stochastics. We have what you call stochastic. What is a stochastic? That's another thing that can show you when the stock is going up and down. There are different indicators that you can use that can show you when the stock is going up and down. We have what you call a stochastic. The stochastic indicators is a two-line indicator that can be applied to any chart. It's the same thing, but it's a different way. I'm going to show you when to buy and sell. The first way that I show you how to buy and sell is when you use MACD. So whenever this two-line cross over, so whenever the black line or the red line or the gray line that you put cross over the red line, we got a bullish momentum. And the red line crossover, we got a bearish momentum. That's it. That's one way. Another way to know when to buy and sell is by using stochastics. Stochastics indicator is a two-line that can be applied to any chart. And also it fluctuates between 0 to 100. The indicator shows the current price compares to the highest and lowest price. Both, it is used to determine the overbought and oversold. When the price is over 80, is overbought. And when it's below, is oversold. So that's a way, that's another way to show you when to get into the market or to the stock. And another way to show you when to get out, when to buy and to sell. So that way is the stochastic shows you the overbought and oversold. Now, sometimes the stock market can be very overbought when too many people buy. Now it's overbought. It's like you got a bottle of water, you put too much water on it. You got a cup of water, you put too much water, you get it flow down. It's overfilled water. We call that the stock market overbought because too many people buy. And at the time, it's not gonna go down because it's already too high. So it's gonna go back down. We call that overbought. And we got oversold when too many people been sold. And now after it's been too many people, it's like squash. And it's gonna go back. Oh, that's the difference between overbought and oversold. I forget the title when I was putting myself in the live so people can know, but I would put it now. The stochastic indicator is a two-line indicator that can be applied to a short, and it fluctuates between 0 to 10 to 100. The indicator shows the current price compared to the highest and lowest price. It is used to determine the overbought and oversold. When the price is over 80, is overbought. And when the price is below 20, it's oversold. So how to know when it's overbought? You're gonna have two lines. You're gonna have a line that says 80, and you have another line down says 20. So the 80, whenever the line goes over 80, so the stock is overbought. Whenever the lines goes below 20, simple, is overbought. So it's time to buy. So that here is the two line here. The stochastic shows the overbought and oversold. Buy like that. There is something here. You're gonna buy it like that. So the way you buy, wait, this two line, we call this line. We call this line overbought, and we call this line oversold. So this line that's 80, and this line we call that 20, the red line. See, blue line down there at the top, it's 80, and the next one is 20. That's the way it is. Someone just called it. See. Therefore, you can do that way. What you're gonna do now? You have those lines between. They are between those two lines. They are between the blue and the red. So whenever middle line cross over, see, whenever they cross over here, we have overbought because this line represents the 80, and this line is the 20. So whenever those line in the middle cross over, see, whenever they cross over, but whenever those two lines down there cross down, the red line is bearish. Because this represent 20, this one represent 80. So whenever it's go down, it's 20. So if you, for instance, you see that here in the short down there, like I showed you from the MACD. So it's going up here. And those one here is up. See? But from there is oversold from there. So whenever it's oversold, it's going down. See? So it's going down here. And stock is going down. It's oversold. So whenever this line cross, you see, all those things is oversold. See, it's going down, 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 down here. See, down, 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 down. It's getting oversold here. The oversold. Now it's gonna go back up. So whenever you see this one going up the 20, because this line represents the red line, don't forget this red line represents the 20. So whenever the red line cross middle as cross in the middle, here, and the stock is going up. One, up, up, up here. Now, see, up. He's getting oversold. You see, all this thing here oversold. So after it's going up, 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 because this way stock get up, but it crossing the 80. Whenever it's crossed, this time it's going to go down. Here from there, you see, and the question is oversold here. So this time it's going to go down. Sell from there. You sell here because it's going to go down because it's been oversold here. It's not going to go down all the way. And it went down. It went down. All this time here, it's going down because those lines in the middle shouldn't cross down the 20. See, oversold all the time. Oversold. See, now it's time to prepare to buy because it's going to go up here. I cross over the 20. That means it's get back. So buy from there. As soon as you see it's cross over the 20 on the top here, you buy because it's going up. As soon as you see also here, it's crossed down the 80. It's too much. It's been oversold. Too many people overbought. Too many people buy. See, go up. Now it's overbought here. Time is going to go down. So that's it. The difference is the MACD identifying a bullish momentum whenever the gray line goes over, you buy. Whenever the red line goes over, sell. It's a MACD. The stochastics itself shows you the difference between the 80 and the 20. Whenever the line goes over like here, goes over 80, that means the stocks getting over. You see the line, those lines in the middle, whenever you see it's crossing, that means over. It's totally overbought. It's time for you to prepare to sell because it's going to go down. You see, it's been going up, up, up. It's up all the way there. It's too much oversold. So you see it's getting back down. You see the yellow thing? It means it's going to go down. It's there. I'm going to show you something called bullish events. It's called bullish events. It's another way to use. Now, listen, you can go back to the video and we'll watch. Now, bullish events is the same thing as stochastic. You can identify the overbought and the oversold. But that's another way to identify overbought and oversold by using bullish events. Bullish events, it is used also to determine the overbought and oversold. Whenever the candles is outside the round line, is overbought. So in the bullish events, it's like it's going to be a round line. So whenever the candles, because you know the candle is short that inside, whenever the candles is out, the cycle, it's overbought. Up. Whenever the candles outside in the bottom is oversold. So the bullish band, it is used also to determine the overbought and oversold. Whenever the candles outside the round, as I said, the round line is overbought. And whenever it's outside down line is oversold. I'm going to show you in the shot how it looks like. Bands. You see in the middle here, those are the candles. All those are the candles that are inside. So we have a cycle line here. Okay. Those are the cycle line. The blue line, make the round here. You see, blue line, go like that. Let's go around the shot or the candles. See? See down line here. See? Now, you see? The stock is going up, up here. Here. See? The candle getting out. See? This how you see the candles get out here is oversold. But as a signal, the candle is too high. If you see the head, like the head get out from the cycle from the inside, that's mean the candle shouldn't go out, should stay inside. As soon as it get out, it's over. But see, candle here inside, stay here, go up, 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 up. See the circle, the blue, that's the blue line. Goes at here, blue line. Here, see the red point? The point here, that's a red. So these candles get out. Whenever it's get out here, that's mean it's overbought. Here, see? It's oversold. See the candle here is oversold, buy signal. That's why we call it, I put here buy signal. So whenever it's pulled down, buy signal. Buy here, stop. So whenever it's oversold, you buy because it's going down too much. Buy because you buy whenever it's oversold, you buy because it's gonna go back up. Buy because this candle here, see the red candle? All those red candles, the stock is going down. Here, see the head here, let's get out of the cycle here. It shouldn't get out, it should stay inside. Like those candles that inside. See all those candles is inside. You just have to see, you just have to look only for the blue line here. We call this blue line the Bollinger Band. We call that Bollinger Band. So this blue line, all those blue line was, see, and we call the red and the green line. Those are the red and the green. Those are the candles. They're supposed to stay inside. And this line, the green line, that's another line. That's the indicators. Sometimes, but this one, candles has to be inside, not going out of the blue line. Anytime it's go out from the blue line, it's overbought. Out from down is oversold. See? It's out here. Over. See? Out here. Oversold. Out here. Overbought. The top, whenever it's out top, that's oversold. Overbought. Sell. Whenever it's out in the bottom, it's oversold. You buy. See? Out here. Candle sign, it's out. Then you see here. See, candle again, outside is over bought. Make candle stay inside, go up, up. It's over. See, we see the dark, the red dot, that's mean it's overbought. I put the red dot here. It's outside, it's overbought. Candle stay inside, it's overbought. Down here, go down here, is over. Sign is oversold here. So whenever you have been oversold, that's a signal to buy. To buy. Whenever you are overbought, that's a signal to sell. So my friend, that's the way to do this stochastic. I'm going to show you something also. I'm going to just take some time to show you, and then later you can review it. Now, whenever you buy, you can use MACD, you can use stochastic, you can use Bollinger Bands to give you a buy signal. Just for that. The MACD is there for you to use whenever the stock is going up. So we got two lines. You can do your practice. You can put those two lines. You can say, let me put MACD. For instance, I'm going to show you, let me see if I can show you something here. Let me see if I can share a screen here, something I can help with something. All right. For instance, you got here. See, I can put this down here. For instance, you got here. We got NVIDIA. See, we go to Yahoo. See, that's what got it. If you can see that here, the stock is going very high today. That's something for today. You see here, it's a big candle. This is what we call that resistance. So that's mean we have a big went up today. See? So the way that you put indicators, versus you have this short here, we call NVIDIA. See Yahoo, you can do your practice. You go to Yahoo Finance, you tap NVIDIA. Once you tap it here, it's already been there. NVDA. And then you put click. 159. That's it. And now, see, click on the short. See the short. You can do some practice here like that. Okay. I'm just gonna go to use it. If you don't have any software or anything, you can go to Yahoo and use the Yahoo short. See? Don't forget, I always told you, those are the candles. We have what you call day, interval, day. So each candle, each of these represent 1 day. So that's a 1 day. That's for today. If you put that, the cursor here, you're gonna see there's a 9. See? 9. See? Today the 9. See, today 9. So this candle, it was for 9. This candle was for last Friday, last week. So this one for Thursday, this one for last Thursday, this one for Wednesday, this one for Tuesday, this one for Monday. So each candle represents 1 day. If you're gonna do a trade for today, you just have to deal with this candle today. It's a candle for today. It's a big candle because the stock was going so high. Okay. NVIDIA is in fire today. Now, see what you're gonna do. If you want to put indicators, after you click on the short, you click on the short here, you do the short. Now you click on indicators here, and then when you click on indicators, see indicators, click on it, come up to that box. Here you tap MACD, MACD. See? MACD, MACD, and then you click on it. And it give you those. You can change this one of color. This one that's a bullish momentum. This one that's the red line is a bearish momentum. So you can leave it as it is if you want, or you can change the color. Click on this. For instance, you want to put black, or you want to put green. Put green. And you put this red. See. See? That's it. Because it gives you MACD things. Okay, there's a line down there. It's cool down because it's always on the down. The week, that's the way you put it. That's the way you put it. You see, the line. If you want to put it on top, you just put it here so you can see. And do something again. Show you how to put it again. Just click on. What you do, you just click on indicators. Put MACD, MACD. You put that. That's the way you that. See? Okay. Don't forget, the stock in that time is in that period of time. We have an inflation now. We are in a bearish momentum because of the inflation and everything that happened now. Stock is down in the bearish. Even though you see NVIDIA as today is 159, it went up, but the regular price NVIDIA is not 159. If you go to the summary, NVIDIA 52 weeks, so the regular price of NVIDIA is 289. See, now that's mean the NVIDIA is a discount price. Even though you see it's 159, it's still a good price for people that buy for a long way. Remember, as I told you before, we have what you call trade, and we have what you call investment. If you have to trade today, This morning it was a good price to trade because it was open. See, if you see open, stock was open at 152.84, and now it's 159.7. That's mean if you wake up this morning, when you woke up this morning, you said, I'm going to trade to make some money. You can trade when it was open because it was open at 152. Now it's 59. You almost made $7. If you buy many share or you do option, something like that, we call option, that's something different. You can make good money there. So now up, open at 152, you can trade because for the day today is a good price to buy, you make it trade, and then you sell. But if you have to invest also, you can invest because for long way, because if you have two things here. You got the day range for today between 151 and 160. So those two range price represent support and resistance. The 151, that's the lowest it can go for today, and 160 means that's the highest it can go for today. You have to see all those things when you study price. The range, because the range for today is 151 and 160.56 for the highest. But the 52 weeks, the whole year, 52 weeks range is between 108. Between the whole year, its lowest it can go is 108, so 108.13, and highest is 289. That means NVIDIA still in a good price to buy, a good range, but it can go lower because but remember, we are in a bearish momentum because of the inflation. We are now recession. Remember, so it can go lower. People that's buying now is a good price. But if you want, you can wait because for today it's moving good because they have good news, something come up. But it's gonna go lower. That's why I've been told before, when you buy what you call it DC, you don't buy at once. When your time go lower, put some money. It's go lower. Like today, if you have to buy, you can wait, it goes a little bit lower. But if you buy, you can buy 2-3 shares. And then when it go lower from 159 to 150, like the range to 151, you can buy some amount. Buy it lower. Lower it goes, you buy. But it's a good price to buy for a long way. But as I said, you can buy, you can wait, get lower. But for people who've been trade today, when the stock was open, they can buy from there. Get really buy because it was at 152, was open. Now it's 159, and the highest that you can go is 60. What I was mean about that, when I go to the short, when you see here, I'm gonna see how people to the top. You can see MACD. This is the MACD. The yellow or the yellow line represents the bearish movement. The blue line represents the bullish. Now you're gonna ask me, you're gonna tell me, oh yeah, I see it for today. Yellow line is still on top, and the stock went up. But don't forget, this whole line is for the whole week. That's means during the whole week, the stock market is still bearish. Because you see, it starts from there. If you're gonna see there, see, it's crossed the red line, still there. See, red line, stock market. Now it was in the sideways, and it's getting up. Because if you go to the if you go to the 5 minutes, you click on 5, see, stock is still bearish. Because we are in the bearish. It's time to buy. That means you can still buy because for people that's doing investment. See? Yellow line. yellow lines represent bearish. Because we remember the stock market is still in bearish momentum. We call that momentum time, where it's still in bearish. That means if you have to invest in the stock market, it's the time to invest. Don't worry about the green line now, because that's it for the day. That's a temporary thing. It's going up for the thing, people that shoot today. But if you have to invest, I'm talking about investment. If you have to invest, it's a good time to invest because stock never change. See, MACD is still. Let me put it in red for you so you can understand better. The yellow line represents bearish. So I need to see, but I just need to show you so you get used to get used to watch. So just go in indicators, put MACD. Yeah, I'm gonna change this. We call that the signal. That's a MACD line. That's a signal line. The signal line, just put it in red, and you put the MACD line in green. You can see it better. Okay. Up, so you can see it better. Okay. Now the red line. What is the red line represent? Bearish. The green line represent bullish. Stock market. Probably the whole week. Something here. Week. See? See green. See? For the week, it was green. It was for the week. See? Start getting higher. See? It's the green line here. See? That's the price I was showing. Whenever you see the green line, top of a line, that's when the stock was. You see, all they can do is up. Stock's in green. That's why it was green today. Because for the whole week, NVIDIA is in power. See? That's the time you buy. You buy from there. See? Green line. See? All the things. See? You buy from there. So as you see from there is crossover. We see the green line cross over the red line. I'm putting it a little bit for you. See? The green line cross over the red line. See? Stocks. Is in fire, is going up. All week, stock is gaining. So that's the way you do practice. Now, if you want to put Bollinger Band, there's a Bollinger Band here. See? Or you can tap it. I'm just going to remove MACD so you can see something different. Indicators, tap Bollinger Band. It's there, but I'm just going to tap it. So if you don't forget, you can tap it. See, put Bollinger Band. Bam. And we leave it as it is, just click save. See? That's a line. So all the candle has to stay inside. See? As soon as if it goes cross, if this candle cross over, that means NVIDIA is not overbought yet. Because this is the circle line. All this line. See? All this line, the yellow line, make the circle here. Circle line. See? Stay inside. So that means it's not overbought yet. And it's neither now oversold. See? Because it's still going up. For NVIDIA to be oversold, candle has to go all the way there and cross over the yellow thing. Has to cross over here, for instance. Here. If it cross over this yellow line, it's overbought. But this time, it's not going to be oversold, overbought now, because because of the bearish momentum we have now. Inflation, recession. See? You have to cross over there. That's when you see the last cross over here, 178 for NVIDIA. So it has to be going all the way line, cost, because this line represents the cycle. That's called Boltzmann. Remember, Boltzmann is a cost line. It's a cycle of between candles. Whenever the candles cross over, overbought. Down is oversold. That's the way. Yeah. So that's the way you do practice. So remember, you can change this in line. You can play. I'm just going to give you some practice. You can use, most people use like candle. Let me just remove the motion. Just when you want to remove it, just click on the pause, just remove it. Now remember, we have what you call, when you want to study short, you go to the summary, you can click the summary. You look at for the previous close. Previous close mean this week, Friday, the stop was at 148.59. And open today at 152. That means today it's been open higher. So it's open 152. That's a good price to open today. And also, you look at for the bid, ask 159.62 and 159.64 for the ask. You just look at that. So what you can do, you can see now you look at for the day range. The day range is 151.41, remember, and 160.56. So most of the time, the day range represents the support, like I told you before, and resistance. The lower, 151, you can go the lower, 151.41 for the day, and 160.56. You see now it's 160. When you go, that's the highest. It might be go to lowest to the highest. Sometimes you can go back. Benefit week. So that's something different I have to show you on the day. In the 52 weeks, that is for whole time. That's for the whole year, 108 lowest, 13, and 289.46. That's the volume. You always look at for the volume to see the volume, how many people buying for the day. It's a good volume. Look at the average volume. The average volume is 49 million. That's 27. That's a good volume. The short event, you see bullish stochastics. That's good. Stochastic, that's a stochastic that I show you. I'm going to show you how to put the stochastic. Remember the stochastic. I'm going to show you, and you just click again on chart, and you click on indicators. Stochastic. Stochastic. See? Stochastic like there. See. These are the stochastic. See? Remember the stochastic has, but here I'm going to put it iron. The line, see this line here? It's 80. Remember I told you 80? The line down there is 20. See? 80 here and 20. So the stochastic shows you the overbought also and oversold. So whenever the stock is going up, and cost over 80 is overbought. And cost below 20 is oversold. See, these are 80s. But what happened to the 80? The 80s, see, there's a cost over 80. Still good. For that to be overbought, it has to be cost 80. It is not. It's still in the middle between 80 and 20. Down here was overbought, oversold because it was costing a bit 20. Here it is oversold. See, a little bit over. So that's the way stock stays overbought and oversold. That's the way it is. Now, to look at again, you can click on financial rate. All those things, that's the thing you can look at. You can click on financial to see financial, see 230, see study market, see the total revenue, see the cost of the revenue. You can do that cost profit or the cost profit, see operating expensive, see operating income. I will not confuse you. I'm just giving you those things so you can know well what to look at. And then all the same. Don't forget, like as I said, the short, you click on the short. Whenever you tap, you click on the search here. For instance, you want to look at for Apple, just AAPL. You got Apple. Okay. Apple also was in green today, 132.3. What you do, just click on the short again. Whenever you click on the short, okay. What you do here, see, oh, the same thing. You just look at it here. Put indicators again. You put MACD, MACD. Any short, any stuff that you want to do, you just go, you do the same thing, you save, and it's there. Okay? MACD is there. Okay? This is the MACD line down there. We got stochastic here and MACD. Move with stochastic. It's just I just want to show you the MACD line. See the MACD? Is the MACD line. Whenever the blue lines over, we got the see blue lines over. We got a bullish momentum. Whenever it's crossed down, we got a bearish. So my friend, that was the way to do your practice. You can do your practice by looking at the MACD and stochastic. Remember, the MACD is for when the stock is going. The line, two lines, you can put whatever line you want. When the gray line or the black line, you put cross over the red line is what you call ever the red line now crossing down, you got what you call a bearish. And also for the stochastic, see, down line, can I go over? Alors, the stochastic is like 80, put these two lines, the 80 and the 20. So the 80, so whenever it's the two line that in the middle, it cannot cross over 80. Whenever they cross over 80, it's overbought. Cross over down 20 is oversold. But the bullish happen is a cycle between, and those candles stay inside them and they cannot go out. Whenever they out from the cycle, the top is what you call overbought. Whenever it's crossed down, it's oversold. Cannot go. Candles has to stay inside. Cannot cross over the top, cannot cross down bottom. That's the way. That's the way, my friend. But I think I'm going to show you somewhere. I'm going to show you one thing here too. That's the last thing I'm going to show you is something called strong support. One thing. Whenever the price found support, 3 times, it is a strong buy signal. It can be either at the 50, 150, or 200 moving average. In that case, you may go long instead. One way to do that, whenever the price found support has to be 3 times. 1, 2, 3. So whenever it starts going down 3 times, you put a line. See this line? You go 1, 2, 3. Call that support. And at the top, stop going 3 times. The top, 1, 3, 4, 5 times. You go more than 3 times. This means we call that a strong support. See? Sometimes it quick time to buy. See? After you see support 3 times, but cross it. Sometimes it can go cross over or break, or it might go down. Support means here 1, 2, 3. Whenever support 3 times, 1, 2, 3, the candle found support 3 times. That's a signal to buy. See? Buy here. Went up. And wait. Like resistance 3 times, 1, 2, 3, more than that. That signal is going down or is quick. For that support. See? And you can put a moving average on them. Later, I'm going to show you, I'm just giving you an advice on this, just give you something, but I'm going to come back to that. I'm just show you the candlestick, what they look like, what they mean. What do certain candlestick means? We have the longer the body is, the more intense the buy or selling pressure. Conversely, short candlestick indicates later price movement and represent consolidation. Long white candlestick show strong buying pressure. The longer the white candlestick is, the further the close is the body open. I'll just give you some name. The candlestick. Next time I'm gonna come back and show you, give you more thing about it. We call that big candles called Mara Bosu. That's a big candle. That's a big bullish candle. Those are the Japanese name. Most of those candles come from Japanese. We call that candles Mara Bosu. And we call these candles doji. Whenever you see those doji candle, in a short, that's a big symbol. Either going up bullish or either going down bearish, but it's a good candle. I'll just give you the name. We call that upside down candles shooting bar, shooting star. We call that shooting star. It's a good candle, that's a signal of bearish. We call that candle spanning top. It's the middle. It doesn't go up, it doesn't go down either. It's just we call that a sideways. We call it spanning top. And now one of the candles, that's a very good candle, very good signal of buying too. We call that dragonfly doji. That's the name. Dragonfly doji. Whenever you see that doji or that candle, it's a big signal of buying. See, whether it's red like this or green, it's a big signal of buying. We call it dragonfly doji. Another I'm going to show you, that's a level of bullish candle. But that's the most bullish, like I just showed you. That's the most bullish. Anytime you see this candle, that's a good bullish candle. That means it's going up. This one, whenever you see it, that's the second most bullish candle. Whenever you see those candles, just pay attention to them inside the shop. That's the most bullish candle. This one is the second most bullish candle. Whenever you see that beyond or among those candles, the shop, it's a good signal of buy. Because that's a normal bullish. If you see that, it's a normal bullish. All those things here, signal of buying. We call this one is a neutral bullish. Whenever you see that neutral bullish, it's a good buy too. There's a give you a big sign. It's neutral. It can be either going up or down, because we call that sideways, but it has a chance to go up most of the time. And whenever you see one, this one is a least bullish, upside down. A least bullish, that's have the most chance to go down. All right. So we have most bullish, we have second most bullish, we have a normal bullish, we have a neutral bullish, and we have a least bullish. And as I said, I showed you a buy signal candle. Whenever we have 3 times in the battle, we call it support. Where time on top we go for that business. But that's something I will come back and show it. So, my friend, just in order to buy in the stock market, sometimes you have to know the technical analysis. You have to use them, know how to use them. Put the MACD, put like, we have other things that you can put after beside MACD, stochastics, Bollinger Bands. You have to use square time. But sometimes people can use only one thing, especially when you do a long trade. MACD is good too when you do trade, but sometimes you just put it to know the difference. We have what you call moving average, where to put the 50, the 150 up, the 150 at the bottom. So all those things, stay tuned, stay on my channel, stay there. So next time I'm gonna bring you more thing about moving average. I'm gonna show you the difference between the 50 moving average, 150 moving average, and I'm gonna show you the 200. All those things, how you can put them in the bottom. So when you see the 50, the 150, the 200, how to use them, because that's a good thing you have to do with technical analysis. It's good. And please stay on my channel. Don't forget, subscribe and like. Every time I got something like that, you will be notified. In my next video, I'm going to show you too. I'm going to be behind the stock, beside the moving average. I'm going to show you. I'm going to teach you something about how to fix your credit, how you can fix your credit, because you need your credit. You need how to know what to do with your credit, because you know what to do with your credit, but you need to fix your credit, because credit is very important. I'm going to show you where to go, what to do to fix it, how to send letters to creditors, to bureaus. I'm going to show you all those things. Stay there on my channel. Like it. Anytime I got something like that, it will be different. So my friend, it's him. We spend a good time today. Just to pick you. If you want, you can review it. If you have a question, comment, let me know. Thank you, and have a good